Farmers, trust is everything. At Genesis Fertilizers, we're not just proposing to build a facility, we're building a future designed for you. With real progress already underway, we're closer to providing Western Canadian farmers with a reliable, locally produced fertilizer supply. Now is the time to take control of your farm's future. Learn more at genesisfertilizers.com/credibility.
I'm Lindsay Smith with Real Agriculture and Real Ag Radio, and joining me now it's Eric Olson. He's the national leader of the Farm Management Consulting arm of MNP. Welcome here, Eric.
Thanks for having me, Lindsay.
All right, we're going to talk a very large topic, a very serious topic, but I hope one that we can put some positive things around. Let's talk a little bit about current finances, let's say, and maybe future finances. How do we broach the subject of perhaps feeling like financially, maybe things are getting a little rough? Is there anything we can do about it? So let's start with maybe framing this particular topic of, perhaps trying to dig into our finances and see where maybe we've gone a bit awry.
It's a great question. We right now, and maybe I'll talk about where we're at in terms of income and where our clients are at. We've just come out of some of probably the best prices that's been seen in any generation for our grain side. But we have seen interest rates have moved up now, and we're now starting to see those effects as well. It took a few years before that really hit most clients. Some had interest rates locked in, and it takes a minute to really feel that on your operations. So we've seen that shift, and we've seen incomes not keep up with it. In fact, incomes dropping while interest rates were going up. So we do have some clients that have to make some hard decisions and might have to make some changes in their operation going forward. On the positive side, we see right now, when I see our clients having problems because of the change in operations and values of land, our clients have equity, so they have something to work with to make these changes. If I go back to the 80s when we talked about the real debt crisis in agriculture, farmers were bankrupt. They had more liabilities than they have assets. Right now, what they have in most cases is they have cash flow issues, so they're more insolvent. So that's the big issue for our clients today. And they have options. It's just, how they want to work with those options.
Mm-hmm. So let's unpack that a little bit. Equity obviously is one of those things where, there's a lot you can do with equity, but there's some things you can't. You can't eat equity. You still need to service debt, but that is where, for some farmers, that is becoming more and more difficult as terms come up, as loans have to be renewed. Interest rates are not what they were a couple of years ago. And certainly, commodity prices have come down, maybe input prices have stayed higher. That profitability equation just doesn't look the same right now. For farms that are perhaps sitting down or on the verge of perhaps having to renew some things, and they're starting to take a look at this debt servicing, how do you know what you can make work? Where would you start on that balance sheet and in those numbers?
The first thing, and it's the leading indicator of how you're doing, is net income, obviously, on the farm, but specifically when we're talking debt, it's your repayment ratio. And really what a repayment ratio is, if you go to the bottom of a financial statement, you take your net income, you add back in depreciation or amortization, you take out what your family spends, you add back in interest, and then you divide that by interest and principal. And obviously, depending on the industry, you would like to see that ratio in 1 point. In dairy, it's a little tighter because of the nature of their income. It's flatter or has less volatility, but we like to see 1.25 to upwards to 2. Okay. So that means you would have 2 times the amount of money that you needed to repay. When that starts getting close to 1 or it's under 1, then that starts eroding your current ratio. When I say current ratio, it's your current assets minus your current liabilities. So it's your working capital. And you can do that for a period of time, because unfortunately in the commodity business, sometimes we have a bad crop and we have a loss year. So we have to fall back on those current assets or that working capital. But over the long term, if it continues to happen, that's when you get in trouble, and that's when you become insolvent. You can't pay your bills, and that's usually when the bank starts having those hard conversations with you.
Mm-hmm. So now they are very difficult conversations, and for some people, they've maybe never had those before, because you're right, we've had some pretty good times, we've had some pretty affordable money, cheap money even, and so for many in their careers, this might be one of the first real cash crunches they've come into, or for some others, this might be, just a return to sort of how they farmed in the past, as far as maybe recognizing that margins are tight. Um, how then, if you recognize that, your next conversation may be somewhat uncomfortable when it comes to servicing that debt, how can farms and farm businesses sort of prepare for that kind of meeting, that kind of conversation?
They have to understand their numbers, and I'm hoping so. We would hope that they have accrual financial statements that allows them to actually understand the profitability on a year-to-year basis on their farm, and to actually have good conversations with their accountants about it. That is how their farm's seen by the bank. So to discount what you get from your accountant and say, well, that's not really how the farm is, isn't right. That's how the bank reads you in the world. So that's the first thing, is understand your finances and where you are. And you're going to hear this from me a lot, is probably look out a little bit, do a little bit of budgeting, understand what it looks like for next year, and see if you're still short of money. Probably then you need to do some things or make some changes. The other piece, I think, is, when you have those conversations with your bank, I think you need to ask them some questions and sit back and listen. And because ultimately, your financial institution wants you to be successful. From a personal level, the person you're dealing with obviously wants you to be successful. And from the banking side, if you're successful, it allows them to lend you more money, and they also make more money. So, I made a few phone calls preparing for seeing you today, and one of the things that was interesting that came up was to ask your banker and ask them as simply as, where do you see my financial position, and how does the bank view me right now in terms of my finance and risk? Some people might be scared to ask that question because it could lead to an answer they don't want to hear, but it's better to hear early than late. It allows you to make some changes. The other one that's interesting, they said, is ask them, what if you were in my position, what would you concentrate on next year in terms of farming for next year, or things that I need to work on in terms of my financial position or finances on my farm. Again, it's a sit back and listen. They'll give you some insights on how the bank is viewing you in terms of their risk portfolio or profile, I mean.
Mm-hmm. Now, I think that is a key point of where we get to, is that, banks are businesses. They have to recognize their risk exposure. They want to get paid, obviously, and that comes to that success piece, right? I mean, a successful farm or a successful business on their end means that lowers their risk, and they make their money on their interest that they're getting paid. But ultimately, at some point, a client may become too much of a risk, and when that does happen, that becomes, a very uncomfortable conversation of perhaps having to find lending elsewhere. If that's the case, how do you navigate that? Like, what are some of the first steps that you should be taking to potentially, find a new partner in lending that wants to see that success as well, that might be able to help?
One of the things I would say is look for maybe this might sound self-serving for someone from MNP, but an advisor, whether it's your accountant, whether it's a farm financial advisor that you might work with. We do this at MNP, but is to have someone else to go talk to say, what this is where I'm at. What are your ideas? One of the things in farming is there's a lot of emotion around the farm. You hear lots of farm business people say, farming's a business. It's not a calling, but farmers it's really important to them, and it's emotional. It's a family farm. It's they've been on that farm for a lot of years. So, getting a third party that's maybe not as emotional to help work through those is really important. If you're at the point, usually by that time if they're calling your loans, you're probably at an area in most of the banks called special loans. So you're dealing with someone who specializes in collections, and they're very professional, and they have outcomes they're looking for. And sometimes having someone on your court that understands that and has dealt in that world before really helps. The other piece, if you're into that position, talking to someone who's in the insolvency business. MNP has an insolvency team, and we work quite closely with them with our farm management group, because from our standpoint, we're trying to find solutions for clients. And really, that's what you want to do is find a solution and get them restructured. Maybe there has to make some changes on the farm, but that's okay because the goal is to continue to farm usually. And that's really what everyone wants to see out of that.
So, and that's I want to leave it on a positive note. This is a very difficult topic. It's not a comfortable one, and as you mentioned, it can be an incredibly emotional one. There's usually pride involved. There's legacy involved. There's all sorts of these components that are really key, that I think are very real, and I think we need to address them and be honest with ourselves that even though hard numbers are unfeeling, there's a lot of feelings that go with these things. But you bring up the point of that restructuring, of perhaps recognizing that things aren't good, and restructuring or letting go of some things. Where do you start that process on sort of what is possible if, let's say, things are not going well, you recognize that you want to get ahead of this? What does that look like, that path forward?
When we work with clients and look at doing that restructure, what we do is we do some budgeting. And really what you're looking at is the industry you're in and what's realistic in the industry you're in. And using prices and yields that are realistic for today. We told a lot of clients 2 years ago that probably $20 canola shouldn't be something you budget on for the next 20 years. So using, a little more conservative numbers and then looking at the farm, and this is where it can get not nice, but the client needs to say, these are the things that I really want to do, and I really want part of my operation. So you get to choose and pick. Because again, like I told you earlier, I think a lot of our clients have equity that they're able to choose, what is this operation going to be? Maybe it's smaller at the end of the day. Maybe they have to sell off one of the industries to save the other one, and that's the one they're really passionate about. So it's a good time to make decisions. But I think getting help from a professional is really important at that point because again, there's emotion. They'll go through things like denial, and they'll get angry. Usually, when a client gets in this position, they're mad at the bank. But really, and you have to work through those emotions because those are real, and that's fine to have those. But then you need to get down and kind of roll up your sleeves and get to work. And clients are used to doing that. The hard thing in ag is that farmers are really, I would say they're stoic. Clients will say, you get two farmers together and you talk production, they will help each other out, but they don't talk about their finances. So, my thought is that then, go to that third party that you can have that discussion with, and hopefully you have a trusted advisor you can do that with.
Mm-hmm. There's certain things you don't talk about in polite company, and money's one of them. So there you go. You're not supposed to. But I think you're absolutely right. Having someone to talk to, who understands the legalities, who understands things like your ratios and where those things would be. I think, from the position of asking the bank where you could improve or where they're worried, I think is very telling for sure. And really great advice to think about. One of the things that I often that we hear about or we know about, nobody wants to be the one that fails, that doesn't see the farm forward. But we also sometimes hang on to things like land that's maybe not productive, or try to have all that shiny new equipment when really we can't cash flow it when times are tougher. And I think sometimes we do have, at least right now anyway, some very hard realities we sort of have to make peace with before we can move forward. So Eric, I really do appreciate this. This is a fantastic conversation. And it's a tough one, but I think it's an important one, and I really appreciate your time today. So thank you so much.
Thank you, Lindsay.